If you're a seller, it's like Santa started delivering your gifts as soon as every retail store pulled their summer stock and started putting up wreaths, trees, and ornaments. So yeah, the holidays are coming early this year. If we haven't met, my name is Necochea, and today I'll be your little helper that's making sure you have the information you need to make a decision about what's probably your biggest investment. The overall market is broken down into segments where each segment represents 25% of the market based on median prices. Right now, the segments look like this. Bottom segment is $1,012,500. The lower segment is $1,549,000. The upper segment is $2,495,000. And the top segment is $5,999,000. And so, your assignment, if you choose to accept it, is to follow the data for the segment the home you'd be selling is in, or for the segment you'd likely be purchasing in. It's like the old follow the bouncing ball, except vastly more important, because we're talking about your money here. Now let's get into it. Starting off with the Market Action Index, this chart tracks the MAI for each market segment. Remember, an MAI of 30 means balance. Higher favors sellers, lower favors buyers. The top market segment, which is leaning toward buyers, but for all intents and purposes is balanced. All other market segments favor sellers, with varying degrees of strength. Don't get me wrong, the upper, lower, and bottom segments are all strong sellers markets, and sellers in all three have a distinct advantage. But in the bottom segment, it's kind of like fishing with dynamite. So here's the deal. This chart shows the median days on market for homes in Orange County. Those are divided into 4 market segments. Plot twist. First is luxury homes. They're actually cruising along at a median of just 91 days on market. Now, I know what you're thinking. 91 days. Is that bad? Nope. Not for Orange County's luxury club. In fact, selling a high-end home in 3 months is like running a 4-minute mile in the real estate world. Typically, homes in this price bracket can sit for 180 days or more waiting for the perfect buyer to roll in on their yacht. If your home is in this segment, you're doing great. Buyers are showing up faster than usual to grab those oceanfront dream homes. The second plot twist here is that the bottom segment are stars of the show, and they're flying off the shelves with a blink and you miss it 28 days. Yeah, it's like those homes are speed dating and everyone's saying swipe right. The supporting cast is the upper segment and the lower segment. They're somewhat in between. Upper's hanging out at 49 days, still relatively quick for Orange County, and the lower is doing the cha-cha at 35 days. Not breaking any records, but they're not dragging their heels either. The next chart up is the percentage of homes with a price decrease. Once again, we're looking for this to come in between 30 and 35%. Above 40% is a softening of demand at current prices, and under 30% shows good demand at current prices. Here we're seeing demand in the top and bottom segments is strong at current pricing. The upper segment is essentially at the top of normal, and the lower segment is up 0.1% and might be floating towards minimally softer demand. If the trend continues and gets closer to that 40%, we could be seeing a bit of an adjustment in Orange County's lower market segment to the benefit of buyers. And this might be something that those buyers can actually leverage now. Now onto the percentage of homes with a price increase. Here we're looking for 5% or less for a normal market. Anything greatly higher, and we'll be talking about a boost in demand or a bunch of savage investors putting their fix and flips back on the market. What we're seeing in Orange County, though, is absolutely, positively, unequivocally unremarkable. Every segment is at 35 or less, which is just another sign that pricing is fairly on point with our current conditions. In a normal market, we typically see percent relisted under 10%, and in hot markets, it's just a couple of percent. Contracts are much less likely to fall through, or listings to be withdrawn when the buyers are actually most active. So another chart with another normal trend line. To be fair, though, we haven't seen anything abnormal out of the relisted readings since the period of January 2023 through November of that year. Since then, every market segment has trended in this normal range, and that's probably been assisted, at least to some degree, by supply just being flatly unable to meet demand, even at somewhat diminished levels. So it's just another sign of reasonable sellers coming together with reasonable buyers. Now, let's take a look at inventory in Orange County, first as a whole, then by market segment. Well, it's still down, but we did add a whole 5 homes to the real estate market of our 3.2 million person county. I'm sure that's going to make a huge difference for buyers. But Orange County now has 2,114 homes for sale, which is still well below our pre-COVID normal levels. Now, this chart shows where inventory is being added and where it's being absorbed. So the bottom market segment saw 77 homes added and 98 absorbed. The lower market segment added 57 homes and had 87 absorbed. The upper added 47 homes but had 66 absorbed. And the top segment added 20 homes while 32 were absorbed. So look, new sellers are coming on the market every day. And it's actually not an insignificant amount. It's just not at a pace that's helping buyers that much. Yes, they're getting new options every day. It's just that a lot of those options are disappearing before they can take action. For Orange County homeowners thinking about selling, the data is screaming timing is everything. Know your segment, price smart, and team up with someone who knows how to market like their life depends on it. Because, let's be honest, your home deserves to be the breakout star of the neighborhood. For Orange County buyers who are feeling pressure to act fast and are just frustrated with the pace of new inventory coming to market, take a deep breath. Put together a plan with your agent and stay the course. Don't miss an opportunity if it presents itself. Identifying opportunities is your agent's full-time job. And if you have a plan of action for when you do find a home, it'll cut down your speed to target time. We know what the impact of waiting can be. Remember when rates were 2% and prices were 13 to 30% lower? There were a lot of people who passed up opportunities because they thought that was going to last forever. If buying a home is your goal, let's help you achieve it. Don't forget to like, comment, and subscribe. Share this video with someone you think will benefit from this veritable cornucopia of valuable information. Because remember, sharing is caring. Thanks for watching. Until next time.